All right, guys, welcome back to the channel. Today, we're looking at the changing momentum in the cycle for Bitcoin and the stock markets. However, it's not the end of the cycle. I think it's important to discuss the potential of any sort of corrections that may be appearing in the charts over the coming 2 to 8 weeks so that you can prepare. However, there are some warnings about preparing for any sort of correction, which I'll get to in today's video. We are at 26 days within a 17% trading range. And if we take it back from that low to the current day, about 31 days. So a month within a 22% trading range for BTC. So it's needless to say that the momentum has slowed compared to where we were back in November. So I think it's an important day to address that in case of anything in the future. Make sure you hit that like button, subscribe to the channel if you're new here. It is your home of macro cycle analysis. I'm going to go through Bitcoin, cryptos, the stock markets, and touch on the real estate cycle today. I've been investing for over 18 years, trading since 2010 and into Bitcoin and crypto since 2017. So hopefully I can share a little bit of wisdom with you guys today. And if I do, don't mind if you support the channel using the links in the video description or check out TIA Premium. We've also got the channel sponsors Bybit, Bluffin, plenty of sign-up bonuses there with them when you use those links in the video description, cashbacks, and free USDT to use on your exchanges. All right, let's kick it off with the agenda today. Number one, coming to an end. Just looking at the data and I guess the facts when it comes to the cycle of the markets. Get into the 18-year cycle briefly, but then dive a little bit heavier today into Bitcoin and cryptocurrencies. I've got Sol, Sui, ETH, and a little touch of ADA there, as I heard you guys talking about that a lot, wanting to see a little bit about that. As I said in the intro, preparing for corrections, anticipating corrections, is where you can lose a lot of money, says Peter Lynch, legendary hedge fund trader, investor of the 1980s. It was like 10 or 11 years straight of 20+% a year. This is time before Bitcoin and cryptos, of course, the 1980s. So it's a phenomenal record. So when he says something, I will definitely listen. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. So people continue to ride the market up, or they're trying to, I guess, wait to see where the top comes in. And then they are trying to anticipate a correction, is where I was going with that, to try and buy up low and then ride the market back up. So when he says far more money has been lost by investors preparing for a correction or anticipating a correction, the way I read that is something like investors, when they are watching the market run up and they're waiting and preparing for a correction to buy into, rather than just buying around a low and then riding those moves up regardless of the corrections that you see in here. So that's a significant correction there for the S&P 500, high to low, 11% over 3 months, mind you. We've only seen Bitcoin basically trade sideways and slightly up for the last, I think it was 18 to, well, I said 26 days in the intro, that was. So 26 days, that was 3 months there. High to low here, basically within a month was 7%. The next move that we saw in August, that was a 10% move that happened in a matter of days. So preparing for those sorts of things can lead you to losses or missed opportunities because you just keep waiting and waiting. If you see breakouts, go for it. So the way, as I said, preparing for this, I think, is not a great idea to prepare in order to get in. Just keep following the charts. However, what I'm discussing is looking at the charts just in terms of the momentum, which means I'm not trying to prepare to capture the low and buy the low and then sell the top. It's just preparing for what I see on the charts. And I think I should discuss that on the channel because I guess people come here every day, 40, 50, sometimes 70,000 of you viewing the videos after a 24-hour period. And so I think I owe it to you. I'll talk about what I'm seeing in the charts. However, I just want to prep us with, I'm not preparing for a correction and I wouldn't be trying to sell here in order to buy back lower and then ride the thing up higher. I don't think I'm good enough for that. Peter Lynch, I don't believe, said he was good enough to do that. And I don't expect anything that I'm saying here to be taken like that. I'm continuing to ride the market up in a longer term fashion. And if there are corrections along the way, I sit through them like I have done with BTC through March into August. When I see the opportunities present themselves, then I'll buy up some more, because overall, I still see that we're in a macro cycle. So we're still in this winner's curse phase for the real estate and economic cycle. And until I see anything change here, I'm going to keep holding my positions until, as I said, see things change, and then I'll look to get out. Now, I don't think everything's going to top at the same time. Maybe Bitcoin and cryptos top sooner, which means I've got to get out of those and into fiat or gold or something else, and then ride those as long as I can. Cash, of course, cash and gold, maybe real estate, and then so on and so forth. But we can talk about that in a future video. It's beyond the scope of today's video. People try to sell the top and they go, well, why don't I just sell now and buy back later? If it was that easy, I think everyone would be multi-billionaires. And I don't think it's that easy, because what tends to happen is that you might sell and then the thing keeps running up a little bit higher. So you might sell here and then it comes back down. On top of that, you go, well, I'm not going to buy in here because I sold there. I'm going to wait for it to go lower, and it never goes lower, and then it starts to run up again, so you buy back in even higher. So you basically lost from here through to here. Even though there was a correction, you prepared for it, but it happened a little bit later, as we'll get to with BTC as well. So yeah, just a quick look at the stocks here. Apple, new all-time highs on Wednesday, and yesterday was just a little down day with a higher close, and there was also a new all-time high for Amazon, Google, Facebook, Microsoft, short of a new all-time high. Nvidia was a couple of weeks ago, and then Tesla was yesterday as well. We had another new all-time high with a slightly lower close. So some pretty strong stuff happening in the tech sector. Now, in terms of the slowing momentum, this is where I want to have a look at the data from the GAN Swing Pro. You guys can find this in the video description. Check out your 7-day free trial for the indicator suite, and then just go and add this tool to your trading view. I'm on the monthly chart here, and I'm just looking at averages. So GAN Swing Pro, turn your settings on, scroll right down. I've got show statistics, and I've changed this to 330 because that's the amount of monthly bars that are on this chart. I want to see all of them. And I've got this cute little box down below here with the percentages on and the bar count on. That's what you see at the top of each of these swings. And we're looking at up swings at this point. Down swings can come later, but the upswing average is 3.38. So call it 3.5. Median is 2, maximum is 14. So we've seen 12 months in a row back in 21, and we saw 14 months in a row back in 2017 into early part of 2018. And then you had your correction. With each of those cases, 42%, 41%, and then you can look at the rest of the percentages along here. This was your maximum percent in a swing. So the upswing percent, maximum 65. So we saw the maximum ever in one swing being 65% 6 months back in 2020 after a very significant crash. And so you have to expect that with that big rubber band flicking back the other way. So what I'm interested in is the average amount of months to the upside and then the percentage. So are we coming close to that now? We're at 4 months into our 4th month here. So 1, 2, 3, 4. This one is counted as a down month. Some people just look at greens, but this is understanding the rules of GAN swings. Okay, 19% up and 4 months in. Average, we're above the average now, and we're basically on the average of the percentage to the upswing as well. So it's not to say that this has to be the end here. It's not always just the averages, but it's interesting that we're getting to that point now. We're not early in the move. Let's call it that. It's not early in the move. So if it's not early in the move, well, then you have to keep riding with the trend, but the risk increases to the upside because you didn't get in earlier. We talk about trying to get in as early as possible, but we're not trying to buy the low. When you can identify that there are some swing bottoms here, well, then you go with it. Just like we saw with August, higher swing bottom, September happened into that higher low, and then it broke out. So there's still opportunities to get in after several levels of confirmation, especially on the swing chart. So yeah, 4 months up here. We take a look back just over recent history over, say, the last 5 years. There's 2019, 5 months, 1 month, 1 month, 4 months, so equal to where we are now before COVID. 6 months, but that came out of a very big dump. 12 months, very long ride up after lots of money printing and, of course, COVID. Then you had 1 month there, 1 month at the top. This was the bear market, so you're not going to get as many months to the upside because, well, you're going to get more months to the downside. It's in a bear market. That's where the trend is going. And then we turn over. The trend turns over right here, 4 months up. And yeah, through that period, I was going bananas online saying it's more likely that's going to be a low than further downside. Like, that's a good area to be getting in. You guys can see that on the videos through 2022, 2023. And then we got the high low into that March banking crisis. And then that was pretty much like a really solid area to get in. But the majority of people were calling for recession at that time. 4 months, 2 months, I went sidetracked again. 2 months to the upside, 6, 3, and here we are at 4. So we're into the 4th month. We're basically 3.5 if you want to count the days. So we still have December to go. But in that recent time, you got 1, 2 at 6 months, 1 at 12 months, and then equal to where we are now. You have 1, 2, and 5 here. And the percentages on those 4s and 5s, 20%, 19% for 4 months. And for the 5 months, you have 28%, but that came straight out of a pretty significant correction there of 21%. So anytime you get a big dump, the percentages are going to be bigger to the upside. Whereas what we've seen is something a little bit more tame, 10.5%. And prior to that, you had a 7%. Prior to that was an 11%. So it hasn't been anything overly significant like the last couple. So we're kind of around that period that you would anticipate and prepare for one. As I said, there's not a period where I say I'm going to sell and try to buy back later. If it did drop, the action plan is to buy some more. So is it coming to an end? Possibly, but it hasn't happened yet, and there's no signs that it is happening right now. Are we still in the 18-year cycle in the winner's curse phase? Yes. Therefore, it's, for me, at least my plan, you could be different. It's not my plan to sell out of everything. If there is a dip, then I buy more. If that's part of my journey, I haven't got enough, a big of a position yet, then that's an opportunity to get some more. However, I'd continue just to ride it, whether it's down or up at this stage. I just continue to ride my portfolio in the direction of the trend as I'm long. So it's time for cryptos and BTC. Let's kick it off with the sentiment, and then we'll get into this USDT and the market data. Fear and greed has dropped off from yesterday. Still an extreme greed, back down to 76. So as I said, there's no point in like preparing or anticipating. I'm just letting you know what I'm seeing in the market. And as I get to BTC, it could even be another little pump to the upside, but the momentum has stalled, and we can see that coming across in the charts. Bitcoin, cryptocurrencies, they have dropped off again yesterday. So there's a 12th, dropped from 43 to 42, and the day before that was 48. And the same thing for crypto. It's basically peaked out on the 9th, down on the 10th, down on the 11th, down on the 12th. So the interest is also lacking as well. The liquidations have hit $300 million today. So pretty much on point here, pretty much average, nothing too crazy. And then the exchange volume has also started to drop off. I'd be concerned if we started to break below this midpoint here at about $80 to $100 million. You can see these other couple of lows here around 90 billion and 90 billion, and this one's at 120. So still another, 20, 30-ish% that the exchange volume can drop before I'd be too concerned that we're going into some sort of quiet period. The price can remain elevated, but it might again be that momentum dying off and things getting a little bit quiet again. This is just basically the lifeblood of Bitcoin and cryptos. That's your exchange volume. That's how much people are trading. So naturally, if the volume's going down, naturally there's going to be less people or less volume getting traded around on the markets. And naturally, you might see the prices stagnate, if not fall a little to the downside. So let's get the short-term stuff out of the way first. This is Bitcoin USD. You had the little peak up and then a lower close, which just happened. And currently on to Friday's bar, Friday the 13th. Happy Friday the 13th to you all. $99,000, about to break the low there. So we have we have our first day down with a swing low forming here. The good news, you got a higher high, another higher high, also two higher highs there, and then higher lows. So provided this particular price action doesn't break below 93, 94K, which is pretty much that key level there after we got the biggest liquidations crypto Bitcoin has ever seen. That was on the 9th. If that is to break down from that point, then our next levels are around 89K and the 85K. But for now, that's still a very, very critical level of support to hold there at $94,000. USDT has also found, for now, at least a higher low. It's not confirmed yet. If this was to break a little higher, then you have the higher low forming. And as we've been focused on with the USDT dominance, if this is able to find a base around 3.8 and not break down, which is a critical level, then we could be in for a little bit more downside for BTC and alts overall, right? Because more money will be flowing back into USDT. So for now, it's in this grinding phase. The momentum has unfortunately slowed, confirmed here, and obviously confirmed on the Bitcoin chart. Some altcoins might be popping off. They might be breaking to new fresh highs like we saw with Sui yesterday. But overall, if we're just getting an average of the market, then the momentum is slowing here. And as you can see with the low to the low to the low, they're kind of getting a little bit, they're equal or getting a little bit less. So low to low is 4.5%. And then from this low to the next low, 6%. So they're not necessarily speeding up. It's basically balanced at this point because there's nothing like what we saw from October down to this November low. 16.7% to the downside. So what you want to see is big moves, big moves, big moves. Whenever things start to slow like this, generally you'll either get a pause here for a couple of months and then a move in the opposite direction. And that was something that we were watching. Well, we have been comparing this right back to where we were in 2021, so that January through to May period, that basically slowed after that altcoin pump and then reversed with a big crash that happened in May. So I'm not trying to anticipate or prepare for that until the chart shows me so. If I see breakdowns of 85, that's going to be a little bit more critical. If I saw breakdowns of previous highs after them, some of the altcoins had pushed to new fresh highs, then I would be getting a little bit more concerned. This is the true altcoin market cap that we've been covering. So yeah, looking at I'm on the daily here, but the weekly just makes things a little bit clearer. This is the period that I'm comparing to. I said we're approximately here, and the corrections also came there. You can see the red bars that are pushing it down and down here, and you still had the grind to the upside. So we've had this first red one, but that entire period, if we take a measure again, it's a move to the upside, and then until it broke out, you got 7 weeks. So I'm looking at this big push, you have another push, but then it reverses. So that's why I'm measuring it from this bar here, basically the excitement, and then slow grind up, correction, a little correction, another correction, and then it kept going into that final move. 1, 2, 3, correction, 4, 5, 6. So basically another total of 7 weeks into that final peak with a significant correction in between that happened in April and then that final May peak. So I think we could be somewhere in that sort of zone in terms of a pattern. I'm not saying at all that I think the market's just going to do that and then collapse all the way back down. The only way that would happen is if you saw this big pump, then you would maybe anticipate that you're going to see a bigger correction. But while this thing is still grinding out, and if it only pumps little, you're probably going to see smaller corrections. It's only when the market gets away from itself and it doesn't get tested along the way with corrections that you see these stupid big moves to the upside and then more ridiculous moves to the downside that scares everyone out. We've seen a pretty significant move to the upside. However, the first piece was getting out of this 8-month consolidation, so March into November. And if we have to test the move to the downside, that I'm looking back towards the 50%, so somewhere around $700 billion. This is the true altcoin market cap, mind you. It excludes the stable coins. Right there, it's TIA. You can get this in the video description. So if it was to test it over the coming weeks, then I'll be looking back to around 700, the top there at 640, very worst case scenario around the 50% level at 580. So onto the altcoins and the other slowing momentum that is very evident on the chart, and it can be overcome, but at the moment it's quite evident, is 21 days from top to correction low. All right, what does that look like in the overall picture? That was the move out of the August low, and then you had that higher swing low form. So a really, really powerful indicator signal for the next move to the upside. This was where I mentioned it to members around $1.10, $1.15, because you had the breakout of the tops there. That was over in Discord. So if you want to get access to that, check out the link in the video description. You want to learn how to trade and invest either full-time or make the most of this particular cycle, that's your link down here, TIA Premium. So get on board with that now. And we're able to identify that with the tools and the indicators that we use. So that's the breakout, 21 days top to low, and then you get the big move out. Look at the next correction, 15 days. Then the next correction, 9 days. The next correction, 3 days. And that was each of the corrections before you got a new fresh price. And now, of course, because we're into all-time high territory, you're basically getting a new all-time high price. This one here was a fresh price, all-time high, and now all-time high, which we got Thursday, so yesterday. So these movements of shorter corrections means you're seeing more people buying up the token at a higher price, and they have less patience for consolidation, which leads to a rocky foundation when the time comes. So basically when you see that final peak, then there might not be as much support back at these previous lows to hold the market up. So essentially it's creating a rockier foundation on the way up, and that's how the bull markets take off and come right back down and take out all of the gains. That's how people round trip moves, because the foundations on the way up have basically become less and less and less. So keep watching the charts to ensure that your prices don't break down. If you see some breakdowns of roughly around $3 at those lows, that could be in for a little bit more pain for a longer time until it builds up another foundational play from these low levels. But to keep that sort of sensible hat on, we're not trying to anticipate the low, just follow the chart. Just keep riding it up. Maybe it hits $5, gets to your 100%. Maybe it hits $6.50, $7, whatever the price target is to the upside. I'll let you be the judge of that. For now, the lows are still getting higher and the highs are still getting higher. So just keep riding that. All we're seeing, as I've said in the title and for the rest of the video, is that the momentum here is not looking great, but just keep riding the chart as it is. ETH, similar sort of thing here. You got a lower high at the moment until it can break past 4,100 points. And should this remain the top, well, your 50% level is still back at 3,200. So not the end of the world. It's still got some good support to the downside before it broke into any really weak zone. The really weak zone would be underneath $2,800, because this is where it consolidated before it broke to the upside. Same sort of thing here for Solana. Still consolidating, a few weeks down. And I had it over this side of the chart because this was the move before you saw that big pump out in 2021. You had to, well, anyone holding Solana back then from $5 had to endure an 80% drop, 80%, $5 down to $1, 16 weeks to the downside with a little jump in between, thinking, oh, I'm out of this, and then just enough to crush you at the end. And then you get rewarded with huge gains to the upside. If we take it from that final low to that first peak, basically, what, 5,900%, 60x to the upside, giving you, $60 from that dollar. And then again, endure it, move to the upside. And you can see this correction was less, this correction was less, and then you get the final peak and the foundations begin to give way. So that's the overall move. This is a long way off. And ADA, similar sort of thing, big pump to the upside. If it slows, you've still got 82 cents to the downside and the previous tops at about 65 cents That last top there was at 81, so basically right on top of the 82 cents. So anything underneath those levels start to get a little bit concerned. Otherwise, it's basically just part of the slowing momentum until we get this next bigger push. So that leads me over to BTC and something that we've been following here, the 2 pump, 4 grind, 2 pump, 2 weeks of a pump, 4 weeks of the grind, 2 weeks of the pump until we get into this final piece here. This was on yesterday's video, so pretty much just a recap. 2-week pump. We're still in that 4-week grind. So if those next 2 weeks are a pump, what I'm talking about here with this sort of slowing momentum could look something like what we saw in late 23 into 24. So it slowed here, pump, and then basically retreated all the moves plus a little bit more. And that looks like this fractal, which I've extended just to make it relevant to the current pricing. Obviously, the 40K pricing is not going to be the same as the 90 or 100K pricing. And something like that, you can see there's a couple of movements to the upside to test those higher prices. And a final move there before it came crashing down. And then again, waiting for that longer build up. You can see this build up here was a lot longer than any of these ones. So it was enough time to reset and build that solid foundation before you get that next move up. I'm not trying to get overly excited, just in case you do see this move up and it's like, well, everything was wrong. It's going to go up anyway. And you get this move, which is what happened at the ETF. Everyone thought it was basically on again. And then basically the price came all the way back down, 38.5K, built a foundation and then got going again. These people all got screwed, built another foundation, and then basically big pump and like 1-2 more big pump days until that peak came in, and it was all over for about 8 months. So I'm not saying that we've got another 8-month wait on our hands. I'm just watching how the momentum has slowed and just looking at some of the timeframes and fractals that we can throw over the top of it to, I guess, prepare the emotions and not the actual trading plans, selling here, buying back at the lows. That, at least what I've proved to myself, is a loser's game. I don't think you can get the short term, really sell the peak, buy back the low. I prefer just to ride with the trend. Speaking of the trend, we have the monthly chart here for BTC, almost halfway through December, and the same thing that we looked at when I was showing you that on the S&P 500. So you get the idea now. The upswing bars are at 3.4. So we're looking at monthlies and how many months to the upside, plus how much percentage in those upside moves before you see the momentum slow, and you potentially get a correction from that point. The average 3.4, and I've taken the average going all the way back to the January 2015 low because these averages are just insane. There's no way you're going to get a 11,582% gain in 18 months from this point. Feel free to screenshot this or record it and play it back to me if that does happen, because we are all going to be absolutely extremely wealthy. I don't know how many different countries would have to get in to pump Bitcoin 11,500%, but you get the idea. Look, if I've taken that data out and just measured it from this day here, so we have 2 full cycles for the data points down. Let's get to the data points before I continue to lose my head. 3.4 months to the upside, which is basically dead on where we are now, and the average upswing 184%. So the 6 months to that March top was 196. Pretty reasonable upswing. The average months was actually a lot longer. So instead of 3.5 months, it was 6 months. And what do we got? The median and the max. So max we've seen was 7 months with a 560% move to the upside. So if we just look at the averages, we're getting a little bit stretched here. The median is 95%. We're at 109% now. So a pretty good move there. And yeah, 3.4, we're at 4 months. So what have we done this cycle already? We've done one big 6 month. We did a 3 month early on getting out of the low. And the rest of them were 1 month with corrections in a consolidation. The previous cycle, you had the 5 months to the peak at 141. Obviously, 500%, it's going to be pretty insane. That would be something like a $250,000 or $300,000 Bitcoin without a monthly swing break to the downside, just basically straight up from 49 $300,000. Let's just put on the chart for shits and giggles. Low for 560%. That would be right there, $330,000 Bitcoin either this month or next month or the month after. Could you imagine that in Q1, this thing just shoots to 300K? Stranger things have happened. I don't think it's going to happen, but it's one of those things that you'd be glad to be proved wrong on. You got 5 months back here out of the COVID crash, so probably unlikely we're going to see that. 2 months, 6 months, really big move out of that low as well, so 344, and then the prior cycle, 5 months, 3 months, 7 months, 2 months, 3 months, 3 months, 2 months. So out of all these, we're at 4 months now. It only happened twice in the 2017 cycle, and in the 21 cycle, you had 1, 2, 3, 4, and we're now into our second one. So you take an average of the two of them, there's only 2 data points. There's 3 of these types of moves that we would see throughout this entire bull run. Something to take note of. I'm not saying the bull run is over, just looking at the numbers, the probabilities, stuff that you can do yourself and put it to the test so that if something does happen, well, you can say, look, I've done the work myself and it's a decision that I decided to make, and that empowers you as opposed to just watching some random person on the internet. With that in mind, if you did enjoy it, hit the like button, subscribe to the channel. I'll be continuing to update this in future videos. And apart from that, I hope you have a fantastic weekend, and I'll see you back at the next video very soon. Take care and peace out.